Hi, everyone, and welcome back to another episode of Financial Planning Tips with Wall Street Alliance Group. My name is Makiah Hunt, and I am a client service associate here, and I'm here with financial planner Keviin Shah. Today, we're going to be talking about HSA or health savings accounts. So, to start us off, Kevin, what is an HSA account?
Yeah, Makiah, great question. So an HSA is a health savings account. This is available in what's called a high deductible policy in your health insurance. So it's important to speak to your employer that's providing you your benefits if there is a HSA option in the high deductible policy that they offer you for the health insurance that you're getting from them. In terms of the role that it serves, HSAs are a great way to put pre-tax money away for the medical expenses that you may incur today or in the future. Every year you can put about $8,500 right now as of 2025 for a family. So think about the HSA as an option if your employer provides it.
Great. Thank you, Kevin. So, what would you say are the major benefits of having an HSA?
Yeah, absolutely. I think there's three major benefits. Number one is what we call the triple tax advantage. So an HSA account is pre-tax money that you're putting away. All the growth on it happens tax deferred, and it's actually tax-free withdrawals for any qualified medical expenses. So from a savings standpoint and a pre-tax perspective, this is very powerful to be able to grow your money. Now, one other thing with the HSA, it is completely liquid after you turn the age of 65. So whether it's buying a new home or another expense that you may have that's a non-qualified medical expense, the money is still liquid without paying any kind of penalty. So it's very powerful from a expenditure and retirement planning perspective as well. Finally, from an investment perspective, unspent funds from year to year can actually be invested and grow, and they roll forward or carry forward into future years. So from a growth standpoint, you have an opportunity to compound the investments that you put into an HSA account.
Great. Thank you so much, Kevin. And lastly, what are some misconceptions of the HSA?
Yeah, I think the first major misconception we see is people think the HSA and the FSA are the same. So an HSA is a health savings account, whereas an FSA is a flexible savings account. Now, the HSA, the money in that can be carried forward and actually compound and grow year after year, whereas an FSA is limited to the money that you put in that year must be spent that year. There isn't that same opportunity to roll it forward and carry the investments forward. Now, one of the other misconceptions that I see is people think they put the money into an HSA and that's the end of the story. But that's actually not true. One key component of the HSA is ensuring that the money actually gets invested. So ensure that any of the cash that you are putting away into an HSA account is being invested so that it grows and you can take full advantage of the triple tax benefit of the HSA. So to summarize, an HSA is a high deductible policy. It's a way to put pre-tax money away towards your medical expenses, and you can actually let this money grow. Ultimately, there's three major benefits to an HSA account. There's the tax savings you get, there's the liquidity aspect after 65, and there's the investment opportunity you have with the HSA. Now, please remember the HSA is not the same as an FSA, so it's important to speak to your employer that provides you your health insurance options to ensure that it is an HSA and not an FSA in the high deductible policy. Also remember that if you have an HSA account, money shouldn't just go into it. The money should be invested so that it can grow and you can take full advantage of the triple tax benefit of the HSA account.
Thank you so much, Kevin, for being here with us this week. And we will see you next week for another episode of Financial Planning Tips with Wall Street Alliance Group.
Thank you, Makiah.
Thank you.